Let's bring in Chris Zaccarelli, Independent Advisor Alliance CIO. Chris, good to see you ahead of this July 4th weekend here. Lots of focus right now on the reflation trade. It hasn't been working, but now do you think it's the time to get into that when it's not working?
Well, it worked a little bit in the beginning of the year, and then for the second quarter, it really tailed off, and that's been concurrent with bond yields. As bond yields spiked up to 174, you saw the reflation trade really start to work, and then as they came back down, you saw that reassertion of growth over value, really tech over the reflation trade. And so I think the reflation trade is going to be one of those things which takes a longer time to play out. As the economy continues to heal, as you continue to see inflation build in the system and monetary stimulus stay very easy, I think you're going to see the reflation trade work. It just won't work as quickly as probably some people were hoping.
Chris, something else you flagged for us is that you don't want to have such a strong view at this point, in your view, whether it's growth leading or value leading. I guess you could call it style neutral, maybe at this point in the game. Is there anything that you're going to be looking for to change that view, to say, it's actually a green light for value, a green light for growth, rather than more of, I guess we could characterize it as a yellow light situation for both?
Yeah, absolutely. And it's, I think the debate that's been really raging for at least the last 8 or 9 months, do you do growth? Do you do value? What's the best way to position your portfolio? And we do agree. I think style neutral is the right place to be because there's so much uncertainty. To the extent that you see inflation really start to come back, you probably would want to tilt a little bit more towards that reflation side of things. However, if there are warning signs ahead, you see the Fed looking to tighten a lot more aggressively, you see interest rates plummet substantially, then you are going to want to get more defensive, go more towards those larger tech names and those names that worked really well in 2020. So for now, the future is a little bit unclear. I think being balanced makes more sense. But as you look to make tilts in your portfolios, and to be clear, we're never fully one style or the other. We're just making the point that we're pretty balanced between the two styles. If you do want to put some cyclical tilts or some sector tilts into your portfolios, I would be watching those big figures like break evens, looking at inflation, looking at the employment picture to get an idea about when the Fed may start to move and how quickly they're going to move.
Chris, in your notes that you sent over here, you are talking about two topics near and dear to my heart: bubbles and black swans, two things I enjoy very much writing about here. Let's start on the black swans. If there was a black swan this summer, what could it be?
It's so hard to predict, right? The idea of a black swan is it's an unknown unknown as opposed to a known unknown. So, for instance, last year, the idea that you'd have a pandemic come in truly was a black swan because it wasn't something that people were looking out for. I think if you look at black swans, it's geopolitical events, it's things that happen with the financial system. So it's going to have to be something that we're not preparing for. We are preparing for inflation. We are preparing for a taper. So something unexpected, either geopolitically or in terms of financial instability. And it's always so hard to put your finger on what might be that causes it. You are seeing some speculation in the meme names. You had seen speculation in SPACs, which has started to come off the boil. So unlike the late 1990s where you saw tech inflating into a larger bubble, or in the mid 2000s heading up into the global financial crisis where you saw housing really starting to a bubble, it's really hard to put your finger on exactly where the bubble is right now. And so for that reason, I think it's even more difficult to kind of pick out where that black swan may come from.
And, Chris, just finally, before we let you go, it'd be remiss if we didn't ask how you're thinking about cryptocurrency in this environment. I'm assuming you're getting a lot of questions on it. We've talked to a lot of money managers who say they're really not in a position to recommend it, or they don't want to be recommending it. But how do you at least have that conversation with someone who's asking, what you make of Bitcoin?
We are getting a lot of questions about cryptocurrency. It's clearly the new topic of the moment, and it's something a lot of people have interest in. There's a lot of speculation in that space. And so for now, as asset managers and wealth managers, depending on the situation, we're really looking at well-defined, asset classes with a long track record. So, our reason for avoiding cryptocurrencies for now is not necessarily that we think they're a bad idea or we don't think they're going to stick around. It's more the idea that they just don't have a long history. Right now, we think of it as something that's more speculative. Clearly, blockchain, the underlying technology, is something that everyone believes is an incredible invention, is here to stay. And to the extent that we're looking to invest in any of those types of themes, we'd be more interested in the blockchain technology for now. In the future, if cryptocurrencies establish themselves and have a little bit more of a track record, it's very possible that that will be added in. I'm sure it'll be in the alternatives bucket, similar to where you put commodities or maybe things like gold. As far as a store of currency. But for now, it's something that you're right. It's just a bucket that we don't incorporate into our plans. And we explain that to our clients, look, what they want to do with their own money outside of their larger retirement and financial plans. They're, of course, always welcome to do any kind of speculation, whether that's going to Vegas, whether that's going to the racetrack, et cetera. But as far as a financial plan, we're sticking to the more tried and true asset classes, such as fixed income, equities, commodities, currencies to some extent.
Chris, the only thing in my bucket right now is a beer for the July 4th weekend. Not sure about you.
That sounds really good to me. We're about a day and a half away. Can't wait.
Fair enough. Chris Zaccarelli, Independent Advisor Alliance CIO. Good to see you. Have a good weekend.